Hi everyone. So welcome to the part two of our learning tutorial about understanding HUD-1 Settlement Statement. So in part one, we have discussed about the information about the borrower or purchaser. So we have on the left side, the borrower side, and on the right is the seller side. So we can see the contract sales price, the settlement charges, escrow account, and then the deposit and also the marcation. So for part two, so we are now um, dealing on the next part of the settlement statement, which also shows option fee. Okay, and then also adjustment for items unpaid by seller, which is composed of city town taxes, county taxes. So these are actually real estate taxes. Okay, then so it's then we can also see in part two the paid in cash by the buyer of the property. So 552.61. So normally this amount will be matched in your QuickBooks account or zero account wherein you pay 552.61. Okay, so the next thing that we are going to do is to map all these items or transactions in Google Sheet. Okay, so this is our Google Sheet. So we are now going to map all of this and then in a form of debit and credit. So this is the debit side and this is the credit side. Okay, so when we are going to enter this in QuickBooks Online, so it will also show debit and credit in the journal entry. So the contract sales price, of course, it's a debit because this will add up to the cost basis of the real estate property, which will be shown in your balance sheet. Then the settlement charges. So all of these are the settlement charges. So the total of the settlement charges is 36,739.40. So these are all the settlement charges, and normally the settlement charges will be part of the cost basis of the property. So it will be part in the cost of this particular property. So 100,000 plus 36,739.4. So now um you or your client should talk to your tax preparer or your accountant and see if there are items in the settlement charges that can be expensed. So it will not be capitalized. So for example, the loan origination fee, it can be amortized. So some part of this amount will be expensed during the taxable year. So others, normally all of this are capitalized cost. Okay. So hazard insurance, you can also talk with your uh, tax accountant if this item will be capitalized or to be included as an expense in the profit and loss statement. So for the purposes of presentation today, we are going to capitalize all settlement charges. Okay, so it will be part of the cost of the property. Okay, so there are also in the item here like deposit and earnest money. So we also put it here. Okay, then option fee it's credit. It's a credit because you pay this amount before the closing of the purchase. Okay, and then the principal amount of new loan is only 136,000. It is because if you can see it here, okay, so the um the principal amount of the new loan is 180, right? However, there is a 44,000 which is a repair's holdback. So that means that this 44,000 is being held by your lender. So only the 136,000 was released to to be part of the new loan. Okay, so we only put the 136,000 here. Okay, then there's also credit on the county taxes. It's a credit because these items are paid by the seller in advance. So that means this is not an expense on the part of the buyer, but on the seller. So we put it on the credit side. Then cash from borrower, we also put that on the credit side because this is a decrease to your bank account. Okay, so as you can see, the debit and the credits are now balanced. Okay, so hope you learned something from our tutorial today for part 2 of understanding HUD-1 Settlement Statement. So in part 3, we are now going to record the purchase settlement statement in QuickBooks Online. So see you in our part 3 tutorial. Thank you.